So welcome back, Jason. Hi again. Thank you so much for taking the time to be with us today to chat about your new book. So exciting. First
Yeah,
of all,
thanks.
congratulations. Yeah, we're so excited for you. We have been working closely with you for quite a while now in several capacities, right? So it's amazing to witness your journey and to see this publication come to life. So yeah,
Thank you.
congratulations.
Thanks. OpenBB played a big part. It's going to be prominently featured in the book.
Yeah, it's actually the first time that we are aware of course, that
Yeah.
maybe in our products get featured on an actual book. So yeah, exciting times. So what can you tell us about your journey into algorithmic trading and how did you get here? And yeah, how Python became an important and crucial tool for you to get here.
Yeah. Gosh, it starts a long time ago. I did one of my first jobs was trading, and first couple jobs was trading and doing trading for a long time, and was always pretty passionate about technology, and did a master's in quant finance and kind of saw how the combination of markets and finance and technology, how powerful that was. And this was, gosh, early 2000 teens, so like 2010, 2012. And, it was obviously well known that computers were doing a lot of trading, but it was still not as accessible to everybody as it is today, right? We didn't have all the libraries and all the open source. And I think we were on like Python version 2.2 or something like that. Um, and when I did my master's degree, I learned MATLAB is what they taught us. And when I got out, I had to pay $2,000 for MATLAB license, and I didn't want to pay $2,000 for MATLAB license. So I forgot how I came across Python, but I came across Python and learned about pandas pretty quick, and I was kind of hooked ever since. And as far as the algorithmic trading stuff goes, it's just kind of an expression of trading and technology. It's like the purest form of both. And nowadays things are so accessible that it's kind of a shame not to use it if you know how to code and if you are interested in the markets. So I've just kind of done it out of habit and as a side, like in my own time for the past 10 years, and came across OpenBB about 18 months ago or so, and started using that. And here we are today. Yeah.
You kind of explain what was your inspiration to get you here, to write this book, but who do you envision as the primary audience for this?
Yeah, the book, I think you asked me about the book, sorry, I didn't really answer that question, but the book was kind of just a culmination of all I've learned over the past couple of years running PyQuantNews and teaching the course and writing 100 plus newsletters. You get pretty in tune with what your audience wants to hear and what they want to see and where their problems are and where they're getting stuck. So I put all that into the book. And, I don't know what the inspiration was per se, other than just more content and getting my what's in my head out into the world. The book is really designed for financial professionals that probably have some experience with the markets, maybe have seen Python before, but are really kind of new to using Python for algorithmic trading. And, the cookbook format is like a bunch of discrete kind of recipes that you can pick and choose from or use. I kind of did it as a journey, but you don't have to go start to finish. You can kind of pick up at whatever pace. But it's like a bunch of very practical pieces of code that I've used professionally and personally over the past 15 years, that just help you bootstrap your way into this space. So instead of trying to figure out how to use pandas from scratch out of context, just read the 5 recipes that talk about how to use pandas for manipulating market data, or trying to figure out how to get stock price data or futures data. Just go, you read the book and you learn how to use OpenBB in 5 seconds. It's really for that. It's also kind of angled towards maybe developers who have coding experience but are new to finance. So I really try to weigh it. It's definitely more tilted towards people who have never seen Python before, but I put a lot of practical explanation in and really try to bring the finance out and explain why things are being done and add a lot of practical nature to make it kind of all around for finance and for programming.
Yeah, makes sense. It's quite a wide audience, isn't it?
Yeah.
So how would you say that the book addresses like the balance between more simple stuff and complex algorithmic trading strategies, especially for readers that you've mentioned with different levels of experience and familiarity with Python and even finance. So
It's always a balance. I can say like I guess two things. First is it kind of takes you from beginner level stuff through to more advanced stuff. So I think you can grow with the book, you can learn with the book, or if you get stuck, you just kind of stop at where you're at. You go pick it up later.
mhm,
The other thing too, I think there's kind of a common misconception that you have to have tons of very complicated strategies and use very sophisticated statistics and things. Well, yes, that's true, but you can get pretty far with some pretty basic stuff like, principal component analysis and linear regression and multivariate regression. Well, if you've never heard of these things before, they might sound scary, but they're pretty well understood, pretty well known techniques in statistics, and you can get pretty far with that kind of stuff. And I try to keep things as simple as possible, but no simpler, which I think strikes a really good balance between the two. I don't go overboard. I don't try to stroke my ego and make myself sound smart by adding a lot of complexity in. I just try to keep it very practical. Um, but that said, at some level, this stuff is hard at times. Um, and you do have to kind of have the discipline and the willingness to spend some time learning the material.
yeah, yeah. And for example, for a non-professional that would come to find this book and have no idea what Python for algorithmic trading was, what should you say would be the key advantages of Python for this?
Great question. It's a very flexible, very beginner focused language as far as programming languages go. You don't have to compile any code like you do with Java or C or C++. You don't need the whole toolkits. You can get by without even typing. It's so-called dynamically typed, which means it figures out what variables are kind of in real time. You get immediate feedback, so you can go into what's called a REPL, which is basically like an interface where you can type code and it gives you the answer right away. So you can just get up and running very, very quickly and make a lot of progress very, very quickly. It's great that way. The syntax is very accessible for beginners as far as like the actual code itself. It's very English-like, it makes a lot of sense. Massive community, tons of resources, tons of learning material, tons of books, all which makes it pretty accessible as far as programming languages goes. Now, as far as algorithmic trading goes, and using Python for it, the benefit of using, say, Python over, say, a commercial language is that you can use Python for anything. If you go down the journey of learning Python and algorithmic trading doesn't work out for you, well, you can use Python for bio or engineering or astrophysics or AI or English or writing or any number one of different things. Whereas if you go learn a proprietary language like PineScript, all you can do with PineScript is write scripts for trading. So you just get a much broader set of experience and much broader toolkit, and you can apply things from other domains into algorithmic trading, along with other tools.
Yeah, you convinced me. But now let's go the other way around, right?
Yeah.
So, at what point would you recommend algorithmic tradings to traders to use different languages, so faster languages like Rust, Go, and leave Python behind?
Yeah, I mean, I think you mentioned it, the speed, right? So Python is notoriously pretty slow relative to other programming languages. So you can't do any real high frequency strategies, which of course retail non-professionals aren't usually doing anyway. But and then if you start to get into massive data sets, the main tools like pandas actually start to get kind of slow. There's new variants out there like polars, which makes that faster. But a tool like Rust is basically like C++. It's very fast. Um, so it's really the speed. Also, if you're brand new to programming, while I think Python is probably the most accessible, it kind of depends on where you want to take your career. Like if you want to go be a high frequency trading programmer, you're not going to start with C, or you're not going to start with Python. You're going to start with C or C++ because that's what's used. Java as well. There's programming paradigms like type safety and kind of thread safety and a lot of things that other languages do better than Python in a kind of industrial production mission critical environment, um, that you could use depending on your use case. Also, you didn't ask about commercial software, but if you're using like a backtesting engine, for example, you've got backtesting engines in Python, but you also have commercial off the shelf tools that make it easier, right? The language is specifically designed for backtesting. It does a lot of things in a lot of very few code. There's even graphical builders and all these kinds of things as well. So it's ultimately a trade-off.
Of course. Yeah. 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 It makes a ton of sense. Going back to Python then, because you've made your case there.
Okay.
What are the essential Python libraries that, like beginners, but not only those, every algorithmic trader should be proficient in?
Good question. I call it the Python quant stack, right? There's a group of libraries that kind of form a pyramid. You've got the foundational stuff, and then of course, depending on, are you doing portfolio optimization? Are you doing derivatives pricing? You kind of angle different ways. But I would say the most important is Pandas. And what Pandas gives you is data manipulation and data acquisition, right? So you get these big data frames, they kind of look like Excel. You can deal with all of this data in a very easy way in Python. Lots of libraries, including the OpenBB platform, will give you data in a pandas data frame. They're basically ubiquitous now. So absolutely get yourself up to speed with basic Python syntax, but shortly thereafter, it's really pandas. Um, I think OpenBB, the platform, is also becoming very important in the space just for acquisition of market data from various different sources in a very consistent way. It's a super powerful tool that sits right on top of Pandas. You start to get into more niche tools like NumPy and SciPy for numerical computing. You can largely avoid these because Pandas is built on them. But if you start to get into more specific use cases, NumPy, SciPy, things like scikit-learn for machine learning, supervised and unsupervised learning, stats models for statistical testing is kind of that middle level. So once you get above like data, then you have the statistical and supervised learning libraries in the middle. And then you have very niche tools like backtesting tools like Zipline and VectorBT are for backtesting. You have like Riskfolio for derivatives, or Riskfolio for portfolio optimization. You have QuantLib for derivatives pricing. So at that kind of tip of the pyramid, if you will, it's really then focused and dependent on your use case. But those kind of middle two layers are pretty important to understand. So pandas for sure, NumPy, SciPy, second, OpenBB as well is in there too.
I'm gonna play a bit of devil's advocate now.
Okay.
Here. I wanted to ask, what's your perspective on ethical considerations surrounding algo trading? So particularly concerning data privacy, market fairness.
That's a good question. We're on the wrong side of the ethical considerations, right? We're the victims, if you were. So you have, I think the best example of what you're talking about is like order flow. So this very kind of niche, nuanced thing. You go onto Robinhood and you submit an order and you get charged no commission, right? You might be asking how Robinhood makes money. Well, Robinhood sells your order to high frequency traders like Citadel. And many brokers do this. Schwab does this. So you've got a company like Citadel that is sitting on the line of legality because they make a business by paying Robinhood to buy their order flow. And they are then expected not to trade in front of retail traders, although they can use all that data to understand and acknowledge what's going on. So is that legal? Yeah, probably. Is it ethical? Probably not, because you're operating at the detriment of retail traders. So you put your market order in for Nvidia at 102.50 and you're like, well, I put a market order in and I didn't get filled to 102.55. I lost 5 cents. Retail traders that are trading 10 shares don't care because it's 50 cents. But, Citadel is doing that over and over on hundreds of millions of trades a day, and they're making 5 cents 100 million times. That adds up. So is that ethical? I don't know, but I think we're on the wrong end of that. Like, we as non-professional retail people don't have enough clout to really impact the market in that way, I don't think.
Yeah, 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 makes sense. And how would you say that the landscape of this field, so algo trading, has evolved since you first started? Because you've mentioned it was a few years ago already, so a lot must have happened. Yeah, so how did it change? If you foresee any trends that's gonna shape the future, what's your view on that?
Yeah, I mean, when I started actually hooking up computers to trading platforms, you had very few offerings, right? Interactive Brokers is the one I've been using for like 14 years. But back then, you had a C API and you had like really poor quality wrappers around the C API that you had to figure out. And it was a nightmare. And you just spent all your time trying to get the code to work rather than dealing with algorithmic strategies. Pulling data down, you had to actually scrub the data because you couldn't trust the free data that you're getting, or you had to go buy very expensive data. And I'm just talking about price data, which is free and ubiquitous now. I'm not even talking about anything more interesting than that. The tools that you were using, you didn't have nearly as many like manipulation libraries, open source libraries. You didn't have pandas back then. So you had to deal with NumPy in array form. You didn't have any of the like functionality that you need, like how do you place an order? You didn't have any backtesting frameworks. None of that really existed. So what you ended up having to do is just spend a lot of time writing code that now you just pip install and you're done. Or getting high quality data that you could rely on, maybe not for trading against, but at least for research. You don't have to write data cleansing pipelines. You don't have to do any of that. You can just pull it down from the network. That's the other thing. Like, the internet was slow back then, right? So you were trying to pull down 50 megabyte data file that might take you minutes. Now it's instantaneous, right? Because you're pulling down megabits per second, hundreds of megabits per second. So everything's just become more fast and more focused on what matters, which is actually building the strategies. The tools have become more potent. The access has become easier. The APIs are better. So everything is just better, cheaper, less expensive. Everything's just better. And unless you've grown up with that, you kind of have this expectation that it's all just plug and play, but it wasn't always like that. Now, in the future, there are these fully integrated cloud platforms for algorithmic trading. You have things like QuantConnect, QuantRocket. You have all these open source libraries for people to do it on their desktops. There's just this proliferation of software to try to make building strategies easier. But what I find is that most of them are kind of focused on this technical analysis stuff. And in my experience, you can't consistently make money in technical analysis in a systematic way. So I see this proliferation of software that makes it much easier to start trading technical strategies that don't really consistently make money over a long period of time. So that's what I'm seeing today. In the future, you know, I don't know where LLMs and Gen AI will come in. I know OpenBB Terminal Pro has the Copilot, which is exceptional for explaining what you're seeing on the screen and kind of summarizing what's happening today. LLMs are language models, right? They're not numerically advanced. Now that might change in 5 years, but I think what's going to happen with the AI stuff is that it will better put performance and risk into the context, right? So if you're in a raging bull market and you have a particular set of metrics, is that good? Is that bad? Should I do something about this? Or if you're in a bear market, do you have enough risk control on? Like, I think trading is hard, finding the edge is hard. I don't know how that's going to evolve, but I think putting this type of thing into context with the AI models and the LLMs will be a big one. I don't see a stop in like proliferation of the software. I think the backtesting models will become better, more multi-asset, for example. I think data will continuously be getting cheaper. And again, everything will just continuously getting better.
That's an optimistic and a very,
Yeah.
very good
Yeah.
perspective to have, for sure. And what about on your individual level? So do you have any future plans, projects regarding data and algo trading? Of course, you have this book, which is now a huge project for the future, but do you
Yeah.
have any others that these readers should look forward to?
Yeah, good question. I'm definitely constrained by time. I've got a full-time job. I work at AWS, so everything I do is kind of mornings, nights, and weekends, that kind of thing. Um, I'm teaching the course, and I just continuously try to pack as much value into that course as I can. And the book is a nod to the course. The book kind of touches on what the course is all about, but I'm just really focused on getting as much value as I can into the course. Writing, obviously I do the social media thing, got the newsletter that comes out. That's kind of where my focus is. I'm thinking about more of an entry level course to kind of teach people Python in the context of algorithmic trading. So the course I have now is kind of touches on Python, but assumes like you have some expertise, and it just kind of ramps really fast from there. And a lot of people come in without knowing a lot of Python. So I think, an inexpensive, short, self-paced course to kind of get people up to running on Python is probably going to be the next project that I work on. But again, it's a nights and weekends thing, so it just takes a long time. Also, with the book, I have a feeling there'll be updates to the code and errata and additions and things like that. So that's a huge lift. It's tons of writing, tons of time. So we'll see where that leads to.
Of course, of
Yeah.
course. Well, but it's so exciting still, and for someone doing this, all of this part-time, it's really amazing what you've been
Thanks.
doing and what you're doing now. So this was my last question actually for you today.
Cool.
Thank you so much, Jason. It was nice catching up and hearing more about this new book. And congratulations again. Thank you so much.
Yeah. Thanks, Rita. It's a pleasure to see you again, and look forward to keep working with you guys. And I can't wait to get my hands on Terminal Pro.
Thank you. Thank you so much.
Okay.
Have a nice day.
Thanks, Rita.